Namaskar. Well, friends, let me welcome you all to Bhim Bhashya, my audio-visual podcast series on Dr. Babasaheb Ambedkar. This audio-visual podcast series has 54 short speeches unraveling as many as 25 different dimensions of this multi-faceted genius that Dr. Babasaheb Ambedkar was. This podcast series is focused on Dr. Babasaheb Ambedkar, his thoughts, his actions, his philosophy, and above all, grand vision he had for India as a nation. This is what this podcast series is all about. But before we proceed, let me reiterate. If you like this audio video podcast series, please like it, please share it, and please subscribe to it. So let's move on to the 7th episode of this podcast series. In this episode 7, I'm going to talk about a rather contentious subject, that is Dr. Ambedkar and the Reserve Bank of India. Let's begin with two incidents in my professional life. The two are diagonally opposite to each other, yet both of them are related to the theme of today's discussion, that is Dr. Ambedkar and the Reserve Bank of India. Incident 1. Many of you may be aware that for more than 20 years, I used to be the speech writer for all governors of Reserve Bank of India and some deputy governors as well. And I did that for a very long time. I was writing the first draft, of course, and then they used to develop that and make the final speech. And I learned a lot while writing speeches, the first draft of the speeches for governors and deputy governors. So this happened in 1990. I had written a speech for the then Economist deputy governor, who later became governor of Reserve Bank as well. I wrote a speech and we were discussing that speech. When the discussion was over, and then while leaving, I just dropped a line that, sir, Dr. Ambedkar had made a similar argument in the year 1926. This Economist deputy governor could not believe it. He said, What? What are you talking? What would Dr. Ambedkar know about economics? And why would Dr. Ambedkar make a statement like that? What would he know about economics? I was very, very upset. I explained to him, of course, what Dr. Ambedkar had said and when. But then when I went home, then I started thinking that he is one of the greatest economists of this country. And he doesn't even know that Dr. Ambedkar was an economist. This was one incident. Second incident that happened only 2 years ago. When I was a member of parliament, nominated member of parliament, Rajya Sabha, some representatives of an All India SC/ST Parliamentarians and Legislators Association or some such association, a delegation came to me and said, we want to take a delegation to the Reserve Bank of India. I said, yeah, why? He said, we have to take this delegation and you will lead the delegation. I said, that's fine. But tell me, why are we going to Reserve Bank of India governor? They said that for the building, the central office building in Reserve Bank of India has not been given any name. So that building should be named after Dr. Babasaheb Ambedkar. I said, why? So what do you mean by why? Sir, don't you know that it was Dr. Babasaheb Ambedkar who established the Reserve Bank of India? I asked him, who told you? You know what he said? You. He said, I told you that. He said, I have heard so many of your speeches and I have seen your writings. You have indicated that it was Dr. Babasaheb Ambedkar who established the Reserve Bank of India. I explained to him the situation. Now, look at these two incidents. First incident, the deputy governor of RBI, who was leading economists of our country believed that Dr. Ambedkar had nothing to do with Reserve Bank of India. In fact, he had nothing to do with economics as a discipline. Second incident, on the other hand, says that Dr. Ambedkar was the creator. He is the one who established Reserve Bank of India. So these are the two extreme views that I had to confront. So where does the truth lie? The answer is this. Both views are wrong. The reality really lies in between the two, but possibly nearer to the second view. Before I explain why I say that, let me have a word on what happened after that deputy governor told me or questioned me about Dr. Ambedkar's contribution to economics and to Reserve Bank of India. First thing that I did was I wrote an article in one of the leading newspapers and wrote an article in Economic and Political Weekly. That is a leading weekly in our country. And the title was basically Neglected Economic Thoughts of Dr. Ambedkar. After that, I wrote two books on Dr. Ambedkar. My first two books were on the economic thoughts and philosophy of Dr. Ambedkar. One was in Marathi, one was in English. And they are small books. They are there in the books on Dr. Ambedkar that I wrote. They are all here. So I wrote those books and then I went all over, from Juggi Jhopdis to Asiatic Society in Mumbai. I went everywhere in Maharashtra and elsewhere speaking about Dr. Ambedkar as an economist. I must have given more than 100 speeches. And to throw light on the second incident, let me narrate a third incident. One day, Sri Vasanta Moon, who was officer on special duty to Maharashtra government, he came to my office and he was in charge of creating, publishing all the books of Dr. Babasaheb Ambedkar from the treasure trove that the government is holding. And he asked me, he said that at some point I have seen a cross reference that Dr. Ambedkar gave a testimony to a British commission about the Reserve Bank of India. Since you are head of the Department of Research, Economic Research, you should know where it is. So please help me locate it. So I promptly took him to our archives. This man sat there for 2 days and searched the whole thing, and he finally got the testimony that he was referring to. The fact of the matter is that this was the testimony that Dr. Ambedkar had given before what is called Hilton Young Commission. So let's compose the story now, how it happened. The British government had appointed a royal commission on Indian currency and finance. It was also called Hilton Young Commission. It was appointed in 1920s. The Hilton Young Commission submitted its report in 1926, recommending the central bank for India, that is the Reserve Bank of India. And 8 years later, 7 or 8 years later, in 1935, 1st April 1935, the Reserve Bank of India was established. It came into existence as a private shareholders bank. A lot of people cannot believe this, that RBI was once upon a time, it came into being as a private shareholders bank. Dr. Ambedkar had submitted a statement of evidence to the Hilton Young Commission, and he had also given a testimony in person. In that testimony that Dr. Babasaheb Ambedkar has submitted to the Hilton Young Commission, basically his argument was very similar to what he had argued in his magnum opus, Problem of Rupee, its origin and its solution. He talked about the relative merits and demerits of gold standard and gold exchange standard. and he had forcefully argued that gold exchange standard cannot be continued with any advantage to our country, because the gold exchange standard does not have the security of the gold standard, because under gold exchange standard there is a risk of too much money being created, and too much money chasing too few goods will create inflation, and that would destabilize the financial system. So, Dr. Ambedkar had forcefully argued in favor of a modified gold standard, that there should be a gold coin that is minted, paper currency like rupee would go along with the gold coins as unlimited legal tender. The ratio between the gold coin and the currency rupees may be suitably fixed, but it would not be mutually convertible. And the issue of currency, this is most important. His argument was the issue of paper currency must be regulated, because if it is not regulated, it can create unbridled expansion of currency, and that would create inflation, which will hurt the poor the most. So according to Dr. Ambedkar, it is important to use a modified gold standard instead of gold exchange standard. Dr. Ambedkar's statement of evidence as well as his testimony was no doubt very important and thought-provoking. However, it was not the only testimony, nor was it accepted by Hilton Young Commission. An unmistakable conclusion, therefore, is that RBI was not founded by Dr. Ambedkar, no matter what is being said in the social media. And I say this with full responsibility. Of course, this doesn't change my conviction that Dr. Ambedkar was all-time greatest economist that this country has given to the world. That doesn't change at all. Dr. Ambedkar's main contention was that there must be some regulator by which the discretion that is left with the issuer of currency would be regulated. This is the most important point that Dr. Ambedkar has made. Many years later, in the 1980s, what happened was, to tell you the story from the files of Reserve Bank of India, the Government of India maintains its account with the Reserve Bank of India. There was a law which said that minimum balance must be maintained in that account of 50 crore rupees. Now, 50 crore rupees had become too small. In the beginning, it was all right, but later, this condition became a big restraint, because RBI could not make payments on behalf of the government if the balance of 50 crore was exhausted. So, at that time, somebody in the Ministry of Finance, maybe Finance Secretary then, and the Secretary of the Reserve Bank of India then, at that time, they came together and they found out a solution. And I discovered that when I myself became the Secretary to the Central Board of Directors of the Reserve Bank of India, much later in 1992. So assume that the balance is only minimum 50 crore balance is maintained, and then Prime Minister wants to, he or she makes an announcement from the Red Fort and wants to spend more money. So if they issue a check, the balance would go below 50 crore. That would be breaking the law. So these two gentlemen came out with this solution that whenever a situation like that arises, what we can do is that RBI can issue itself ad hoc treasury bills for 91-day validity. Ad hoc treasury bills carrying interest of only 4.6%. And once they create that in favor of themselves, they can credit the same amount, similar amount, to the account of the Reserve Bank of India, Government of India account in the Reserve Bank of India. So what will happen is that if 10 crore check is to be issued, they would issue treasury bills worth 10 crore. So Government of India account with the Reserve Bank of India is credited with 10 crore. 10 crore check is passed without any violation of the rule, and 50 crore balance would be maintained. This is a simple example that I'm giving. So this is how they solve the problem. But that was not solving the problem. That was beginning of much bigger problem. Once they started this trickle, that trickle became a huge flow. It became a flood. It opened the floodgates. So what happened was RBI was reduced to a kind of kamadhenu. Whenever government wanted more money, they would simply get RBI issue ad hoc treasury bills and make those payments without violating the law. So this was the situation. Can you imagine, to maintain the 50 crore balance in that account, or whatever minimum was prescribed by law? Can you imagine by the year 1991 how much was the value of treasury bills which were issued? You are not going to believe this. 1,08,000 crore rupees of worth of treasury bills were issued to protect the balance of 50 crore. This is what happened. So RBI had been reduced to a kamadhenu, and finally it was realized in the decade of 80s when fiscal deficit went on increasing, and then there was a crisis in 1991, and after the crisis Dr. Manmohan Singh came as the finance minister, and new economic policy based on liberalization, part privatization and globalization was set in motion. There were many financial sector reforms. One important financial sector reform, and there was a formal agreement signed between the then finance secretary and the then governor. Agreement was signed, and what was that agreement? To phase out the accumulated ad hoc treasury bills. Over a period of time, they were supposed to be completely phased out. What was Dr. Ambedkar saying? About 70 years before that, he was saying that there should be some regulator who will control the expansion of currency. That was not paid any attention to in 1926, and in 1996, I believe, when they did make that agreement, nobody remembered Dr. Ambedkar, that he was the one who had suggested it 70 years back. This very clearly shows that it was Dr. Ambedkar who was so much ahead of time. We do what he had recommended 70 years back, but still do not give him the credit. That is the misfortune of this country. On that little sad note, I conclude our discussion about Dr. Ambedkar as an economist extraordinaire. These 5 sessions, episode 3, 4, 5, 6, and 7, they were dedicated to Dr. Babasaheb Ambedkar as an economist extraordinaire. We will move on. When we meet again, we'll take up the subject of Dr. Ambedkar as a social reformer. So long until we meet again real soon. Thank you. धन्यवाद.